Good evening, this is Nick Inman from VolumeProfileTrader.com on Sunday, May 6th, and I chose to do this video. Well, my intentions were to do it yesterday, Saturday night, but I didn't, and then so today I just figured I'd wait till Globex opens, and we begin the nightly trade, and I'm kind of glad I did because the market's opening, or if it were to open now, it would be down %. And this is the S&P rolling over against what was the euro rolling over last week and the dollar rallying. And now we're seeing the acceleration in the S&Ps. And I think that's worth taking note of and being aware of what's going on in the market. This 1337 level in the S&P, which was the low from March, and we're testing it now, but you can see, and this is a 9-month chart, and the reason why is because I'm just trying to look at the most recent price action from when the market originally failed, or I should say fell, from when we started bouncing at these lower levels, the October low, and now we see the rally. The point of control for this entire move is at this 1363 level, which we're gapping down from Friday afternoon to Sunday night, and that's a bit scary, and it's something to be noteworthy of because it's telling me, and as a studier or of volume profile, it tells me that the significant move in this time frame is about to happen, and the reason why is because the price level and right around it is the heaviest volume that we've seen in the past 9 months. So we're due for some type of gyration away from this level, and from the price action, it looks like that direction is to the downside. So for a potential target, you're looking at 1337, which isn't too far away, and then from there, you have some volume at this 1313 level, so that would be something worth watching. But really, until you get down to 1262, 1263, which is coincidentally about break even on year, that's the next huge patch of volume. That's when it starts. So I would suspect that we have a shot, if we do not hold these 1337 levels, with going from as far down as 1313 and potentially down to 1264. So I would say, as I said last week, I don't think you can justify holding a lot of equities here, especially high beta plays that are cyclical. I just don't think it's worth it. So really, let's focus on what's really going on, and that is the euro falling, and I'm sure it has something to do with France's new president, I believe. I'm not going to get into that because I don't really care, but all I know is the euro is going lower. Look at the amount of volume we've had at this lower end of the range. Kind of looks like an inverse of the S&P. Looking at on a 1-year chart, even we did have the point of control at, I believe it was 1497. I'm sorry, 1.4187, or somewhere around there. But the point is, you're looking at a euro that's falling out of bed here, and we had lower highs, higher lows, and then a fallout against the point of control. I think you press this. I think you press this short down to these lows with any strength to be sold into, and that's just how I feel about the euro right now. And the dollar is confirming my thesis, though it did come down a little further than I had wanted it to, but close enough. Basically a double bottom here off of a higher low, and what we're seeing is 4 or 5 strong days in the dollar going to test. Well, it already broke this downtrend resistance line just like it did on the euro, but I would suspect 82 on the dollar. And looking at it on a 2-year chart, if I can get the full zoom, 88.90. Let me just do a 5-year chart. That should do it. Okay, you can see this 88 to 90 level on the dollar is like an ultimate sell signal, and that is worth noting. So you have to be aware of the fact that this dollar, the dollar, of course, it could hit 82, and you look for sellers or you look to take profits up there, partial profits. But I wouldn't be surprised to see some type of rally up towards 88 on the dollar, and it's let's face it. Every time price has come down to this 75 level or so on the dollar, where has it given you an opportunity to sell? 88, 89. So if we're in that cycle, then you're looking for that type of move. One other thing, just to note it, is the last two times it was direct, within 2 months, up at the top end of the range. This has been more of a grind. So that either means that maybe move could be a little more sustainable, or it's weaker and we could get a lower high off of this and roll over. Regardless, I think it's right to be long dollars right now. Okay, so despite the fact that euro is down huge and the dollar's up huge, if you're looking at gold is hanging in there, and it's only down $3, $4 right now overnight. But what you're looking at is a potential opportunity in gold. You look from 1667, and I'm looking at volume here, to 1640 or so. That's kind of your pivot. You can even go as low as 1630 for gold. But you're looking for a move off of this level, and what you're looking at, let's break it down to this what we're looking for short term. Okay, we have some lower highs, and we have slightly higher lows. But the point is, the volatility has come in a lot. The gold market went from having not much bigger swings, because that's not where I'm trying to get, but much bigger ranges from top to bottom in, say, a week or 2 week span. And now it just keeps compressing. We're coming to an apex, and we're looking for a move off of these levels. If you're a believer of the long side in gold, which I am, I would look to have a stop on any short-term position right below these current lows. And if I was a seller of the gold market, I would look to have a stop above these current highs. And one thing to note is we've had 3 days straight of selling pressure, so it's not necessarily the best time to get short gold. Rather, you would see it on some type of move to, say, 1650, and then you look for the sellers to come in, and that could be your opportunity to the short side on gold. What's most impressive to me, though, is that gold's not really down a lot, despite the fact that the dollar is up a lot. So just something to be noteworthy of. The Dow breaking down from the point of control, something to be noteworthy of, and the NASDAQ, I believe that picture is a little different, and it is. The NASDAQ is really an interesting, because the point of control is still at 2320 level. We broke out. Now, I guess some levels that you could look at are this trend line. We have some volume that cuts off back at this 1256 level. 2560 level, which is another 2% or so. And then from there, it kind of gets sticky. I would just be looking at the 200-day, this trend line, for some type of reference. But I still believe NASDAQ's everything's something that you want to be, that wants to be sold into, and you just want to look to stay long dollars and gold if that's what's working. So anyways, really that's it. Take care. Have a good night. Stay smart. Don't take excessive risk. In the equities market, you will have an opportunity to buy at lower prices, and just take advantage of that when it comes. And the best way to do that is by holding a lot of cash, so you're not, kicking yourself for holding positions that aren't going to work out in the short term. So, have a good night.